Bitcoin absolutely ripping at the start of this week, kind of started to pull back a little bit amid all of that uncertainty around the U.S. banks, First Republic, Credit Suisse, and then kind of back to life and springing into action again today. You saw this week that a lot of investors got a little bit of a glimpse into the cracks in the banking system, which is, fun when we're debating Bitcoin narratives. It might kind of fuel this idea of Bitcoin as an alternative financial system. And I think that a lot of investors that didn't quite get that before got a little bit of a chance to rethink that. But I would say that, despite whatever way it is that you value Bitcoin, be it digital gold or a hedge against inflation or a cryptocurrency, I would say that the price action is still largely driven by the macro, by the inflation data and by the Fed rate hikes. So, this is a welcome rally for crypto investors right now. We'll see what happens next week with the Fed meeting.
Right. And today, of course, actual gold, physical gold, been rallying as well. So it feels as if several things having lined up in favor of at least a trade to the top end of the range for Bitcoin, such as you say, NASDAQ 100, we've been talking about how it used to trade right alongside it. Maybe the Fed's going to get easier. And then actual gold, as people question, traditional banking relationships, starts to work. I guess the question is whether it vindicates the big picture story here or it's just a trade.
Yeah, and you know what? There's a lot of panic in the market as well right now. So there's a lot of momentum that this is moving on. And we talk about this a lot. Bitcoin is kind of the tip of the spear. So it is the riskiest of risk assets. And people kind of look at it as a long-term asset if you are wanting to hedge against uncertainty. So I definitely agree with that. And you would see that Bitcoin kind of broke with its correlation with risk assets after, that sort of leading the price action a lot last year.